Thanks, everyone. Thanks for coming. Welcome to the Blockchain Venture Landscape webinar series kickoff. Today is going to be an exciting day. We have a number of speakers to give it a little bit of education, but first, just very quickly, I have to go through the important notice for 361 firm events. This is for compliance, so just let me get through this quickly. Then we'll get to introductions on the speakers, and we'll take it away. As you know, always rule number one, teaching, no pitching or politics. For future events, please onboard via the diagnostic. There's some interesting events coming up later in the series where that's important. The session is recorded, as you just heard, and this will be shared. The recording will be shared across platforms, YouTube and LinkedIn, so everyone just please be aware. For the speakers, please remain on camera and keep an eye on the chat for messages and questions from the moderators. For the audience, please remain on mute and off camera unless you're speaking. There will be some Q&A at the end. And please go ahead, audience, and submit questions during the session via chat or use the raise your hand Zoom feature, not literally what I just did. Okay, so quickly, that's the overhead for the important notice. So good, today we'll be doing blockchain venture landscape with a focus on building use cases, entrepreneurship, technology, and IP issues. And we'll be following that on day two. We'll give a little bit of information at the end of the session with regulatory, finance, and investing. But now for this lineup of speakers, please, I'd like to hand over to Julie for introductions. Take it away.
Oh, thanks so much, Dan. It's been awesome having you be today's operations director and really making the breakout happen. So thank you so much for pulling us all together. It goes right along with the fact that you connect those qualified investors and all of the passion you have for your quaint and crypto funds. So thanks for bringing us together. On this stage, in the first part of this topic that I think is important, my name's Julie Lamb. I am a co-founder and founder of a tech startup. And we love putting events together and making things happen for the crypto curious and the blockchain, folks who want to come in and learn about it. And I met this first presenter and speaker, Mark Lepresti, on a stage, actually speaking about the topic of future. And he's the founder and director of IDI Group, co-founder of Battlefin. So really great place to scare and excite if we want to have one of those conversations. And I think what's so important is that for me and seeing Mark on CNBC, Fox Business News, and the wildly popular X Spaces, Bulls, Bears, and Blockchain host. It's great to have him on stage. We have Ryan Muranaka. He's the managing director of Chicago Atlantic Group. He searches, and their company searches for investment opportunities where the risk is fundamentally mispriced. And one of their investment strategies happens to be in their platform about digital mining. And this brings on our moderator of the segment, Alessandro Patti, one of my partners in business. He's a futurist advisor, IT veteran, web pioneer, business transformer, and he's a forward-thinking technologist. And no other great person to hand it off to than to you, Alessandro. I might be busting in to keep you on schedule because we have a tight one today, but I'm going to hand the reins over to you. Hey, Alex, how are you?
Good morning. How are you guys? Great to see you all again on camera or hopefully soon in person again. Yeah, let's just jump right into it. I know we have everybody here. We have a short amount of time and want to give everyone as much content as possible. I want to start the conversation, I guess. We'll pick on Mark because, he's easy to pick on sometimes because he loves to, have some fun with us all the time. So, Mark, how are you today?
Alex, good morning, and good morning to the 361 family. Jim, Bill, Dan, Julie, so many people obviously that I know and love. Thank you for inviting me to join, and I will do my best to impart and drop some knowledge, as Julie likes to say.
Well, I'll keep you in your wheelhouse. So I know you love data. You're like data pioneer, and there's a lot of things about data. Part of the things that we work on together happen to be in that space. There's a bunch of different things, technologies that are out there, AI related, non-AI related, that are coming into the space that are some things scary, some things not scary, some things are exciting to us that we're focused on. Maybe touch on a couple of those things, and then we'll jump into a couple of the use cases that I kind of have listed for us, and then we'll bounce back and forth between you and myself and Ryan, and we'll give everybody, drop some knowledge, as you say.
Yeah, sure. I think maybe for the audience, it might be helpful to provide some foundation in terms of my adventures in blockchain and crypto, because they come from sort of two different angles, interesting and complementary angles. One is, as many of you know, I practiced as a securities lawyer for 20 years in the venture and alternative asset space. Always my own law firm, so the entrepreneurial spirit lives and shines brightly within me. Not to get too philosophical about it. But so I was first involved in blockchain and crypto probably in 2014, when I was asked by some of my hedge fund and or VC fund managers to help them start what would become some of the earliest crypto and blockchain native investment vehicles in the space, some of which are still around and brands and names that you would know. Sort of had the good sense as a securities lawyer to avoid getting involved in and or working with initial coin offerings, which of course we know what happened with that, first sort of boom cycle of those ICOs. They looked like unregistered securities offerings to me, and of course 99% of them were. Then correct. Well, I don't want to paint too much with a broad brush. But then as I retired from law and focused on IDI Group, which is a boutique multifamily office that makes direct investments in data-driven tech companies, as well as Minetta Advisory Partners, that I have the pleasure of working with you and John, my partner, John Nigerian, which I think most of the team knows, on both enterprises. It was natural for me and for John and our other co-investors to get involved with and invest, as we have and continue to do, in various areas of the blockchain and crypto ecosystem. So we're invested in and advise 3 investments in crypto miners, 2 advisory engagements in crypto miners and crypto mining related technology, where we're also in the cap table. We were invested in an advisor to an early DAO, which fascinates me from the perspective of the legal construct of a DAO and what that means. Having an organization that doesn't really have the traditional trappings of an organization and corporate governance and all of that, and that as a lawyer fascinated and continues to fascinate me from the perspective of how that would evolve, and that's very early innings. We are involved quite a lot, and this is where the other angle of data comes in. You mentioned I co-founded Battlefin some 11 years ago. It's hard to believe. And that is it was an early pioneer in the data world, an early native data-centric business where we're essentially a platform that looks for unique sources of data from around the world, curates those data sets and data sources, and presents them to the other side of our business, which are data buyers, primarily financial partners. Hedge funds are the biggest buyers of data, but also in the corporate space. And it struck us very early on that crypto is data. Frankly speaking, that is all that crypto is from a DNA perspective, and blockchain as well. So we saw that as a very sort of logical nexus for our endeavors. And we've been involved, of course, in AI. We used to call it machine learning back in the day, but we've been involved in that. We have several AI-related projects that we're undertaking at Battlefin, which I won't bore everybody with. So I've had a lot of experience, a lot of adventures in the space. I'm sort of bearish from a trading perspective right now. I think the regulatory environment is an absolute disaster. I famously coined Gary Gensler, Gonzo Gary Gensler. I'm waiting for my royalty check from the New York Post for that headline. But I think we're in a completely untenable regulatory environment in this country. And you like to ask, and the wonderful Julie Lamb likes to ask me all the time when we're on stage, what scares and excites you? It's like, oh my God, those are two of the hardest questions. Just ask me a direct question, Julie. But what scares me is the notion that we have this ridiculous, really, really ridiculous regulatory environment. We have regulation through enforcement. We have a complete lack of regulatory clarity. We have the SEC getting, losing a few rounds in court, where there have been some recent rulings that have questioned the extent of the SEC's authority, as well as whether or not it's actually fulfilling one of the two pillars of what the SEC is supposed to do. It's enforcement, but also regulation, and you really can't have one without the other. But what is at risk, and what scares me is that we have seen, both from the perspective of the flow of capital, but also the perspective of the flow of ideas and companies just leaving, right? Just exiting the United States. The crypto blockchain world always had deep roots offshore, non-US, whether it's the Crypto Valley in Switzerland, which I was
Mark,
go ahead.
Not to drive a pile driver into you really quick.
No, go ahead. I'll shut up. I know I was going on too long there. It's okay.
No. It's not about going on too long. I was actually trying to, there was a couple of little topics that I want to kind of transition over into what we're doing. But when you talked about regulatory stuff, and I wanted to kind of cover a couple of different use cases. One of those regulatory things, and the project that I just advised on had to do with art, and we had to do it, specifically because any type of fractional ownership that has to do with breaking things up in the United States is considered a security, right? So coming back to your securities, wheelhouse here, how we were able to, not only break through what is a security, but add utility on top of it from an art perspective, right? So we launched a Banksy. We sold out of the first, our first run of it, relatively quickly within a day. But providing utility through the security are the things that we're focused on, right? So there's a couple of different, topics that I wanted to just run through the group of things that interest me. Obviously art, fractional ownership, creating digital media experiences, and provenance and community, and utility for the people that own those tokens. Medical treatment and records, right? You own your identity, own your treatment, and creating data marketplaces for different types of scenarios. Another company that, I do advisory for, is doing treatment, telemedicine through VR and through devices, and creating those data marketplaces for that medical history. Stuff that I'm working on with you from advisory as well, AI and blockchain, creating the source of truth for data correlation, right? Those are different things that we want to pull into, where is that source of truth? Is it from a hardened mind blockchain like Bitcoin, where we use that as the central point of token, where it says, here's the data, here's how it's unlocked, and creating those different workflows around, hey, I know this data, I know this token, it's immutable, right? How do I add that immutability to my data stream, right?
Yeah. So let me that's a lot. So I want to try to maybe throw an insight out there at you and at the group.
Yep.
One of the things that we're most excited about, something that we're pursuing from an initiative perspective, both with IDI as well as Battlefin, is the application of blockchain and AI to the solving of significant problems with the utilization of data at scale. So that was a mouthful. There's some on this call I know that know exactly what I just said, but one of the biggest problems with the adoption of the use of alternative data at scale, particularly for SMBs, right, small and medium-sized businesses and organizations, is that it is expensive, it's time consuming, it's complicated. Data purity and data compliance, particularly if you're a hedge fund or a regulated financial entity, is probably the largest, one of the largest, if not the largest. I'd argue it's the largest.
But Mark, if we
Yeah.
take that thing, right, and I want to involve Ryan in the conversation
Sure.
as well. If we take the complexities of what you're trying to do and use mining as the source of truth for digital stamping or oracles or different types of data streams, Ryan, maybe you can kind of touch upon like how your contracts, your mining, all these different applications that are still being built and utility are still being built on top of how mining is being used today.
Sure. Yeah. So, quickly on my background, I did a 20-year stint at a JP Morgan owned bridge lending company and real estate development company. So my expertise, and then I've been kind of nerdy all my life, and for the last probably 5 years, I've been mining Ethereum and
good company
out of my garage until I had rolling blackouts and my kids wanted to print something on the printer, the whole house would shut down. So I moved it to a professional operation, and now we're a very much an industrial scale Bitcoin mining. And I don't think, first Bitcoin, to get into like the security and nothing happens, whether you're talking, all of these applications that the developers use, it all happens through a solid blockchain and solid blockchain security. And so my efforts really focus on Bitcoin mining, my expertise. And a lot of people don't realize that, Bitcoin mining is essentially, it really is the backbone of the Bitcoin network. Miners use powerful computers to solve very complex mathematical problems. And when they solve these problems, a new block is added to the blockchain. And in return, miners earn Bitcoins. And so all of us miners, public or private, we're all battling to get after those same very rewards. And this process releases new Bitcoin into circulation. And every 4 years, that amount gets halved. So there's a scarcity. And in essence, really Bitcoin mining harnesses the power of mathematics, and it creates a decentralized, secure, and transparent financial system. And so all of these apps, Bitcoin network has never been hacked. It is easily the most secure network in terms of its compute power, energy that's used in its cryptocurrency algorithm solving. And so it provides the backbone for developers to create these apps. And so without the Bitcoin miners, really, you won't have as secure of a network. And that's what really ultimately Bitcoin mining does, is it creates the security for the network, creating people's confidence in these apps where they trust their money and wealth to. I don't know if that kind of answers some of your questions, but what I like about Bitcoin mining is very, oh, thanks, I didn't see the slide. It's immutable. It's all mathematic based, rule based, and you can't change it. So I think that's a real advantage.
Yeah. So
Alessandro, the punchline that I was getting to was in the opportunity and the excitement. There's this massive problem with using data at scale, a lot around data purity and security and provenance and all of that. The solution is blockchain, and part of the solution is using AI in conjunction with blockchain to be able to very quickly, natural language, without hiring a suite of PhD data scientists, to get my answer. So that's, and we're actually involved in initiatives and deploying capital towards those solutions because we think that that's where all this comes together. That was the punchline that I didn't get out before we turned to Ryan. Ryan, I agree with everything you just said, by the way. So back to you.
So I just kind of wanted to, again, with AI and blockchain, that's one of the things that excites me, obviously, the medical piece, all of those different components with identity and, voice, video, you put a video out, on YouTube, where's the source of truth? Is it you, right? You got AI chatbots, AI different things. So there's digital stamping of data sources to make sure that they're actual data, that you're pulling those into these new AI blockchains, and the ability to say, I want to know where that, if I'm making a phone call to you, that it's actually me, right? We're still getting to those identity pieces, but I think with static data and the things that we're all working on, we can easily use a mining blockchain, or even a proof of stake blockchain, to create oracles that digitally stamp that data to make sure that we're getting it from a true source of truth. And that's one of the really exciting things about where I think blockchain is going, is combining those two techs, right? Where we have this transformative artificial intelligence technology that can really parse all the data, but where is it getting from? Right now, it's ChatGPT 4 is, and 3, and all these other ones are data sources that a person or a group has filled. I know we're running short on time, and I wanted to make sure, because I could see Julie giving me the hostess with the most nod over there with the hook coming out. But we can go, the three of us can go on for days with mining and different technology stacks. But Mark and I, we have our advisory group that we do help a bunch of different companies scale. Ryan, love to continue the conversation with you with mining. I mean, I've been involved with it for a very long time. We had this discussion last week, and Mark's obviously an investor in many of these different mining companies as well. So there's
well, don't go anywhere. Don't go
Yeah.
anywhere, Alessandro. We have a hand up. Gerard has a hand up. We have our experts on the panel, our market masters. Ryan, you're here with us. Alessandro, you guys are ready. Is your mic hot, Gerard? We'd love to have your question.
It is really good. Well, it's really just more an offer. So for those of you that don't know, the Government Blockchain Association actually is hosting a conference at the end of September on blockchain and artificial intelligence. And one of the things that we're talking about is that the GBA is working with the United Nations to build blockchain and AI standards. So we'll be showcasing them at the Internet Governance Forum in Kyoto, Japan. There'll be about 100,000 people in participation. And one of the folks that is going to be at the conference that will be talking about this is Dino Caltado del Casio. He's the Chief Information Officer of the United Nations and in charge of the digital transformation. So he has oversight over all the UN programs. And we'll be talking about specifically about blockchain, the intersection of blockchain and artificial intelligence. So if anybody is interested in participating in any way, let me know. I'd be more than happy to open some doors for you. So I just wanted to make that offer.
Thanks so much, Gerard. We know that you're going to be around on the 13th to talk more about that. So we'll take that offline. I don't want to poach too far of this conversation because we've got the Q&A here for Ryan. I have a curiosity. I'm going to throw out a question. I was doing a little internet searching and I see that the mining is just a part of the arm of what you guys have been doing within your business and investment strategies. What made you make that decision? Or the company make that decision to go there? Because I mean, it excites me. I'm glad to see that somebody stepped in to do it, but I have a curiosity to know, how did you guys get there?
Yeah, good question. So Chicago Atlantic Group, we manage lots of buckets of capital. And one of our most, I guess, high profile ones is we manage a publicly traded mortgage REIT on NASDAQ that focuses almost largely on cannabis and cannabis related loans. So cannabis and blockchain have similar kind of investors, higher risk, reward tolerance. And when we launched our IPO a couple of years ago, our investment bankers said, well, look, this was basically around, call it September 2021, when things were getting pretty frothy. Our investment bankers, and at that time, we had already started a small pilot mining program. We were looking at lending against Bitcoin miners and assets. And we decided, well, if we're going to do that, we better understand it. So they tapped me to build out our first mining facility. But so we had already started. So really, the investment bankers, it was the timing, of course, when everything was frothy, kind of encouraged us, poured gasoline on that, you might say, because they said, well, look, with your successful REIT launch, we feel like this would be a great vehicle that we could take you public on. and our existing investment bankers were very excited about it. So it was kind of a combination of we were already doing it, we were already excited about it, but investment bankers, yeah, I would say they're to blame.
Funny that you should mention cannabis and crypto. One of my first actual ecosystem build outs was actually for a greenhouse. This was 2016-ish. Friends of mine have about 2 million square feet of greenhouse, said, hey, what are you working on? And we built this full heat reclamation system of the miners into the greenhouses, because they were paying, I think, $500,000 a year per acre just to run the boilers here in the Northeast. And we were able to actually create a money printing machine rather than a dump of heat into the air. We just to run the boiler. So yeah, we have a lot to talk about, but yeah, creating these different ecosystems within the mining infrastructure and supporting all these different blockchain opportunities is definitely something that I would love to continue the conversation.
Well, we're deep into the Q&A section. Was there, between our three speakers here on stage, Mark, there's I see you, I hear you so many times up on stage. You come up with a great question or two that's able to tie all this together between Ryan, Alessandro, and you. When you see this common thread of this building entrepreneurship, where you can go with tech. We're going to get into the IP portion in the second half hour of the presentation. Oh, Andrew, you have your hand raised. Let's call you to the stage. Is your mic live?
Yeah, Mark, could you just sort of characterize broadly, if you're looking at all the data sets, you guys doing lots of stuff, how much of it is sort of needs to be literally assembled, built, put together? The whole ChatGPT thing, basically, let's just use a large language model on the whole internet. That data is sitting there. But for specific purposes, that isn't necessarily the case. So how much needs to be sort of assembled, constructed, gathered, and put into a box that can be used versus things that are kind of just there to be examined? Just generalization.
Yeah, no, Andrew, great question. The short answer is all of it. I mean, if you talk to people that really understand the space, I know we have a lot of people here that do, ChatGPT that sits on top of a data lake of publicly available, not verified, source verified, or fact verified, incomplete set of information is sort of like saying, I built an LLM over Encyclopedia Britannica from 1986, and it doesn't know what went on beyond that. And by the way, we don't know who wrote the Encyclopedia Britannica. It could be right, it could be wrong. So where we see the value and where we are focused is on building LLMs that sit on top of proprietary data lakes, right? Stuff that's not publicly available, and using those sort of custom-made LLMs and AI tools, which we are building right now at Battlefin, to help extract very specific insights, to answer very specific questions, KPIs, as the finance geeks like to call them, by putting that over those data lakes. Because again, as I said before, and I like to, as I always try to do, is say, what does all this mean? Well, this is where we're focused, this is where we see the investment opportunity, and this is why we're deploying resources there, so you may want to consider it. It is that nexus of using blockchain and AI to make data manageable, consumable, compliant, verifiable. But by and large, to your first question, Andrew, most of the data sets that are out there need quite a lot of normalization, organization, cleaning and cleansing. And that's before you get into things like tickerization, right? That's one of the things that the largest data buyers, the hedgies, who are still among the largest buyers of alternative data, like, well, your data set's tickerized. In other words, can I put in NVIDIA and get data answers and insights from your data sets that are specific to that company, and that's a massive undertaking that's been attempted and abandoned, frankly speaking, by some of the largest. I won't name names, but some of the largest players in financial data, and even some of the oldest incumbent players in financial data. So my excitement again is around using these tools, some of which are new, some of which are not, some of which are, AI is not new, it's the evolution of machine learning, to actually make data consumable, but to a broader market.
You bring up a good point, Mark. William has his hand up. We also had some folks mention a few things within the private chat, and we're a little off. We're going to be about 5 minutes into our next segment of the IP portion, which we have Mike Kasdan and Janan Glasgow George here for us for the second part. But I think this is really important. A few folks had mentioned between Ryan and Alessandro doing a quick distinction between blockchain and supporting both financial and non-financial cares, because a lot of people in here seem to be interested in the non-financial use cases. But I think it's more important that William has his hand up. William.
Oh, hey, I with the experience that we have here on the dais, hey all, we're in arguably sort of still in the middle of the crypto winter. And I'm curious, Mark, Alex, Ryan, how do you see things moving forward and kind of the front and center investment opportunity, from each one of your perspectives?
Yeah, I could jump in on that from my perspective, right? I have, there's no shortage of advisory, right, for us to actually build all these different projects. What I see is happening is there's a fear of building in the United States. Everywhere else around the world, South America, Europe, the project we just launched is in London, right? So, we are continually building in hopes that the regulatory environment here will actually give us a framework to work within instead of trying to take these technology stacks offshore. It just doesn't make any sense that I have to build and do things in a regulatory environment that will welcome new technology rather than push it to the side until a bunch of talking heads can figure out how to understand what the technology is.
Yeah, you bring up a good point, Alessandro. I want to keep this nice and tight. So, William, I think your question is due to be answered by each one of Ryan. Give William and Mark really quick, if you can share your short input of giving him as much information as you can without being his investment counsel.
Sure. So Bitcoin mining had suffered just like most of the other ancillary crypto businesses with the crypto winter. I think one good point is of reference is when the peak, call it 2021, was happening, to build a 35 megawatt Bitcoin mine would cost around $135 million. Today, we can build that same mine for $13 million. So we've seen basically a 90% reduction in the cost to build an industrial scale Bitcoin mining company. And that has a couple of impacts for the legacy companies that raised a bunch of money in the early days. They most likely overpaid for their miners and have had substantial write-downs. We frankly got lucky. It took longer for us to build, and I'll just call it a second mover advantage. But our cost to an individual miner, for those that don't know, it looks like a machine that's about the size of a shoebox. And that miner was $12,000 in the heyday. We're buying them for $800. And so it's created a real down cycle, which we feel like it's a good time to build and scale on. But the depressed price, of course, has reduced miner profitability. And without getting, I know you want a concise answer, but that's only going to be exacerbated as the halving occurs next year, which basically cuts the revenue for all the miners in half. And so that will create an interesting dynamic, which typically reduces supply, and we see a big improvement in Bitcoin price and sentiment. But I would say there has definitely been some casualties, but also some advantages from the crypto winter. And so I'd like to say we're taking advantage of the downturn, but there definitely were impacts. And it's a good question, Bill.
Mark, you get the last word here.
Yeah, I think I can sort of verify everything that Ryan has said. We took some pretty significant losses on some of the crypto mining investments that we made for the reasons that he pointed out. But I think big picture, I'm short-term bearish. I don't recommend, when I'm talking about cryptocurrencies, I don't recommend trading in crypto right now. I think we will not, we'll sort of continue to be fairly range bound with Bitcoin and Ethereum as we continue to muddle through this horrendous regulatory and legal situation that I don't really see changing in a meaningful way until we have regime change. So, next election kind of thing in this country. And you saw that from, the attempts from Cynthia Loomis and Christian Gillibrand trying to bring some sanity in terms of regulation and a regulatory construct, legislative construct around cryptocurrency and blockchain in this country that was doomed to not go anywhere, unfortunately, as we know. But I am bullish, both short, medium, and long term, on making investments in the companies that are taking advantage of successfully, or we think successfully taking advantage of the development of technologies. And again, I've tried to sort of hint, if not explicitly mention, that the nexus of the use of blockchain and AI for the consumption, usability of data at scale. You can't be bearish on that short, medium, or long term. Data infrastructure, I say this all the time, very publicly. Data center technologies that are able to bring energy cost and improve energy efficiency for data centers. We're not making less data, folks. Every time we pick up one of these things, we're creating more and more and more data. So if you think about it from the very simple perspective, if we're making more coconuts, we have to store the coconuts somewhere, and we have to make sure the coconuts are preserved to sell those coconuts. Well, it's the same thing with data. And that is a commodity that we have never made a commodity at the rate or the pace at which we're making data, and it goes up exponentially every day. Therefore, data infrastructure, bullish, short, medium, and long term.
Wow, that was really power packed, you guys. We went over by a whole 10 minutes into it. So I think what we're going to do is we're going to adjust the idea of the agenda. It's so important to be able to bring up to the stage. Thank you so much, Ryan. We want you guys to stay on because there might be some crossover questions. Mark and Alessandro. We have Mike Kasdan coming on as IP attorney, partner at Wiggins and Dana, and Janan Glasgow George. She's an IP attorney, founder of Neo IP. They both have done so much great work within the intellectual property. Forbes has recognized them. I love the idea of Mike Kasdan. We met at an NFT meetup, and then you shared with me how you're a founder of Lawyering Why Human. I love that you both are very comfortable coming on stage. Janan, I know you have some slides here, so I want to bring to the stage and welcome them, two of my friends here in real life and virtually, Mike Kasdan and Janan, bringing you to the stage, being able to share some of the developments in IP and the structure behind some of the issues that you guys have come up across and how we can pay attention to them when we're learning all about our new technology that's right in front of us and where we want to put our attentions. Mike, how are you?
I'm good. Thank you so much, Julie, for the kind intro, and nice to be here. Hello to all the folks out there, and really enjoyed that discussion and have a lot of thoughts that align with a lot of what was just said. So it'll be interesting to get into it from an IP angle. But why don't I kick it over to Jinan to start? I know she had some slides to sort of look at patent data, which is always kind of a fun way to see kind of what might be coming down the pike and get into some of the use cases and IP issues that we want to talk about, and we'll do it in a compressed way.
Sure. Great, thanks. Julie, I don't know if you were in charge of those slides, but I'm going to sort of piggyback on Mark's comments there. I'm bullish based on the IP data. There is increasing investment across every sector. If we look broadly on blockchain and crypto, the applications are not just in finance. They cover sports, healthcare, transportation, voting, gambling, geolocation, energy, telecom, video gaming, of course, digital media, tracking, even manufacturing and Internet of Things. I'm going to ask for the slides that I have perhaps to go up. Awesome. Just going back through data, this I'm sharing is patent forecast data. Think of it like Google Maps, but for patents. So we use this data to advise companies and investors, venture capital funds alike, on what's happening. Why do we care about patent data? Because the investment to create patents always leads market activity. That's just the law. So patent data is a leading indicator. Consider patent data as kind of a proxy for R&D investment, a signal of what's coming in the future. And so again, across this sector, we see investment increasing. But a quick look at who's at the top tells us a little bit about where the investment's going. IBM here on the top right is listed as our leader, closely followed by Alibaba Group. We're looking here just at US patent data, but because half of all of the patents filed in the US come from outside, US patent data is the cleanest, richest, and has the least amount of noise in it. So we're looking, of course, N-Chain, MasterCard, and PayPal makes sense. But remember Bank of America, early in crypto and blockchain, especially on crypto, the executives were speaking down about it. Maybe some suggesting there was fraud related to it. And yet, from the oldest amount of time, Bank of America has been a consistent investor in the technology behind cryptocurrency overall. The next slide, please. If we dig in a little bit deeper to this platform and the payment architecture, the leadership changes a little. So we can see N-Chain, Coinbase, MasterCard, Capital One, and PayPal leading what's happening there, covering wallet technology, payment system, even e-cash. Next slide. Again, think of this like Google Maps for patents. This is the highest level, but we can drill down into granular data that you don't need to be an attorney to appreciate. Wallets here, you see how this changes again. Bank of America at the top of IP investment, patent investment, and wallets. Sometimes we get surprises here. The next slide, please. And Intel also on the wallet side. That I think is fascinating. We've talked about NFTs. Interestingly, here you see most of the clustering is near the top. So all the players invested later in this stage. Of course, NFTs coming into popularity, and wow, what a burst on the scene. Real quick look here, we see a lot of concentration around 2020, 2021 from groups like Verona Holdings, a strong force intellectual capital. That's a so-called patent troll. What does that signal? That signals that there's expected continued growth, addressable market for litigation to obtain royalties. And that's kind of an unusual thing to see so quickly in this space. And Ernst & Young also rounding out the top 5, and again, Bank of America. But we get a lot of signals on the timing, the consistency, and then insights we draw from this data I think are a little surprising occasionally. The next slide and my last one is the third area that I'm just exploring today with you, and that's tokenization of securities. We talked a little bit about the role of securities laws, but how can blockchain and automation, the smart contracts assist us with modernization? Number 2 here, NASDAQ. Of course, their secondaries business, it's important to be able to automate that, even though most of it perhaps today is manual. Beyond this top 5, and again, you see kind of later dates and kind of blasting again on the scene, this so-called patent troll, strong force intellectual capital. We also note smaller companies. At later in October, we'll be featuring a North Carolina-based company that has a tokenization of securities that does provide for automated, even restricted stock transfers, equity shifts. So even the small companies, we can see what's coming. The larger companies that you'd expect to be at the top, when they're not here, that means they didn't build it, they'll need to buy it. So it's a good indicator of M&A targets and activity to come in the future. We're pretty bullish based on this data to see it's ever increasing, again, not just in the financial, but across those industrial sectors. Hope that's a good start to stimulating the conversation on IP rights, IP investment.
Yeah, I kind of love that because I feel like we just got the weather forecast from patents and by a very talented patent meteorologist. But I mean, for me, the data, like, so I'm an IP lawyer as well. I've been doing patent, trademark, copyright law for 20 years, but started my firm's blockchain group last year, and got into this sector 4 or 5 years ago, really through patents. And I think it's always interesting to look at that kind of data. I think sometimes people overstate the importance of patents. Like, you can see those articles saying Apple just filed this one patent on this one random thing. It means it's going to come out. Well, no, not necessarily. But I think looking at that data in the aggregate, as a leading indicator of R&D investment and sort of potential product focus is really interesting. So I know we have a few minutes. I wanted to spend my few minutes kind of on two topics. One, along the lines of what scares and excites. For me as an IP lawyer, coming to this space, and yes, as others have mentioned, we've seen NFTs kind of skyrocket with digital art and collectibles, and now we're in a very low period for that. And what does it all mean? For me, it's been really interesting because I came to this space very crypto skeptical, and my introduction was through use cases that really don't have anything to do with crypto. Use cases like the one Mark was talking about. I have clients working on, blockchain being used as a truth source for verifying data and being able to monetize data. I have clients, interested in blockchain for supply chain and having a digital source of truth that for a product that's going through and being touched by 13 different companies. You see it being used in real estate for title, and then of course all these sort of online uses too. So for me, I came to this space. People were saying, hey, we're in this new Web3 space, IP laws. The old IP laws don't really matter anymore. That's not right, of course, because we still have just the law. So, I've been following what's been going on sort of the copyright front and the trademark front as folks are grappling with NFTs, and there's some litigation. But to me, what's most powerful and what I just wanted to mention to tie it together is the fact that this technology for the first time, and I've been an IP lawyer a long time, the two things that I'm excited about are democratized access, and others have talked about tokenization of various different things, whether it's security, whether it's music. Like being able to tokenize something, reach new markets is exciting. I know we have regulatory stuff there to overcome, but that's one thing. And so the ability to monetize and democratize and do creative things with IP, when you create blockchain-based products, and Mark was saying we're creating more and more data, and that's true. And I think about it, we're spending more and more time in digital spaces, and we're creating more and more digital stuff. And this is a way of transacting in that stuff in a way that allows you to monetize it. So to me, I'm just the IP lawyer, but I am also sort of short-term bearish, long-term bullish based on, all these potential use cases, and based on the fact that we do have some regulatory pain to get through in the short term. And then the other topic I wanted to mention very quickly, and we can then take questions, is just last week on that regulatory front, the SEC had its first action against, an NFT project. It was the impact theory, the founders' keys, NFTs. And that's kind of not surprising given how things were trending, but kind of the first of its kind. And they had sold, I think, $30 million of NFTs with utility, meaning, different roadmaps for, products, of, digital characters and access to events. And, it was over two very strong dissents that were like, hey, we never regulated, buying antique watches and other sort of collectibles, as securities. But we do have that settlement and that data point from last week. It's kind of interesting to digest on the regulatory front. So I know that was just a little bit of a taste. Sorry, go ahead.
No, it's a fair point. And as you were saying, I'm just going to pick up on your joke about weather. This data sets are always changing. Every week it's changing. So you have to look at it more frequently. But the cannabis sector was mentioned previously. Activity and investment in IP in cannabis across all of the areas from cultivation to food and beverage, that's also continuing to increase, which is suggesting that the market's about to catch up with it. And I think that's the signal I'm taking away from here, that both short-term and long-term, we're going to see this begin to come out and I think erupt. The metaverse area and gaming sector, we're seeing applications of the blockchain as well. I'm in agreement with you, Michael.
Yeah, I think it's interesting to have kind of the real world applications, chain of title, but the metaverse stuff too, with big economies taking place in digital assets. And look, I know that a lot of people, if you look at what folks are saying, they're like, oh, well, everyone that was in Web3 is now sort of shifting to think about AI. It's kind of a new big thing. But I do think that there's a really interesting convergence that the first panelist talked on, because that is a true need, a true pain point. We have so much data, but to be able to have sort of verified data, monetizable data, I think that's kind of a killer use case.
And also the data on patents, there's no second place. If you're looking for M&A targets or anything else, you got to get there first. Sounds like Mark has a question.
I wanted to just make an observation that it takes, Mark Sainer and his incredible team under Julie's guidance to get 3 lawyers to agree on something. So I think we need to just acknowledge that moment.
I marked that moment in time. Yeah.
Yeah, we need to. I will all remember the day, where you were when 3 lawyers actually agreed on something without associated compensation, at least that I'm aware of. It's a little bit of a mind bender for me though when we talk about how these things are being classified, because we talked earlier at the very beginning. Alessandro said anytime you fractionalize something, you create a security. Well, that's, and far be it for me to argue with disagree with one of my best friends, but the reality of it is that's really not the case. Anybody that's ever bought a timeshare there's so many other things that are fractionalized and have been fractionalized for many, many years that are not considered securities. So, and I did notice, Michael, that settlement last week, of course, as settlement has less value as precedent than a court decision. But certainly plenty of fodder for talking heads like ourselves to continue to cover this, and I know that I will on the shows that I do, because it's fascinating stuff.
And it's been interesting, Mark, you raise a good point. Look, patents have been fractionalized forever. Licensing, you can do non-exclusive licenses to many, many entities. And so you're really fractionalizing patents. There's been some talk of application of blockchain to patents. It's not really gone anywhere. There's still a lot of opacity in patent data. Who owns them? What's really been licensed, right? But it's a good point.
Even NFTs. If anybody wants to go to the origin of the species, Google Bowie bonds. And something David Bowie tried to do a long time ago in offering his fans the ability to acquire an interest in his future revenue and royalty streams. And the progeny of the Bowie bond story is worth looking at.
Yeah, I was going to bring up that same issue because, fractionalization and tokenization is kind of one of the main benefits and kind of tapping these markets, unlocking value, monetizing IP. So we need to get to a point where you can do that, because that's the main benefit of it. I wrote about, right before the Super Bowl, Rihanna, well, it wasn't Rihanna, but it was someone connected to Rihanna who had digital streaming rights, tokenized one of her songs and sold it to folks. It was very small. It was based out of Sweden. But once it hit the press in the US, they pulled it back because regulatory fears. But I think that speaks to that's sort of what this technology unlocks. And if we're in a place where doing that is untenable regulatory wise, it's not a great place to be short term.
Michael, I see
monetizing the data from IoT, Internet of Things data, and who are the sources of that? We're walking around with these smartphones. They are sensors. and data monetization from geolocation, et cetera. Like that is a future. We're talking about people losing jobs from ChatGPT and AI. How about become a data sensor, walking, living, breathing, monetize your data? Absolutely.
Yeah, I think we have a question from Andrew. Hand raised.
And there's also one, Michael, Joseph asked one in the chat. So I want to be respectful of everyone's time. We only really have about 4 minutes left. Joseph's was the question that came in first. So I'm going to circumvent this. Andrew, I'll have you come next as the last one. Joseph asked that he'd love to hear the panelists' thoughts on the ETF institutional money from Blackstone, et cetera, coming online, and how that will drive Web3 economics. If one of you can take that, and then we can get to Andrew's question next, I think that would be a great use of time.
Sure. Any thoughts on that from anyone else?
I can talk to it. So in my Bitcoin mining lens, people have been able to buy Bitcoin, all the time. Like, so an ETF or, exchange traded fund, I don't think provides anything novel. What I do think it will do is it, like with the likes of Blackstone, it'll create legitimacy and acceptance. And I think that will in turn drive like 401k investment. And I think overall it's a good thing, but I don't expect an immediate impact for like the price of Bitcoin, because anyone can buy Bitcoin right now. But I do think it will be a long-term buoy for the price and adoption. That's my view, my take.
I think you're muted, Julie.
Oh, thank you very much. I did call just one last moment for one of our last questions, and that's in your hands, Andrew. You had your hand raised.
Yeah. Talking about tokenization of assets, I'm going to try to make this the simplest, dumbed down question I can, because that's the best way to ask it and answer it. If you look at assets, whatever they may be, at what point am I missing that if you tokenize an asset, the regulatory aspects of whatever that may be should carry with the asset? You tokenize a share, it's a security. You tokenize a commodity, it's still a commodity. And at what point is that true and not true?
Ooh. That is probably not a 2-minute answer. That's so the simple answer is in theory, right? If the tokenized version of the thing has all of the attributes of the non-tokenized version of the thing, you should logically be correct, with one major exception, and that is the means and method of the fungibility of that thing in its tokenized form. So if I take
you mean how it's, Mark, you mean how it's traded? How it's transacted?
Can it be traded? What is its fungibility? What is its transferability? Because once you change that even a tiny hair, you've materially changed the nature of the instrument.
Yeah. So if I have a commodity and I tokenize it and I go to the CFTC, I can get a checkbox, or is that where we're going with this?
It's not that simple.
Well, I'm oversimplifying it for the 1-minute conversation.
Yeah.
If I'm completely wrong, you can say so, but otherwise.
Sounds like we have to continue the conversation.
Okay, Janan, you've called it. Andrew, we're not going to move on. You've actually brought up a very good topic for us to dive deeper into in the series of these that Dan has put together. I'd love to thank everyone for coming up here on stage. We have, of course, Dan for putting this together, Alessandro, Ryan, Mark, Janan, and Mike Kasdan coming on stage. Would love to give it back to Dan, our fearless leader, the operations manager and director of this whole series. Dan, thank you so much for trusting us with this last hour.
Thank you, Julie. You make it easy to do. If there's one thing I took away from today's session, I think I heard it from everybody, was blockchain is the digital source of the truth, and not just for financial use cases. And that's going to be really important coming up in the next few sections. So I think near the end, we heard a little bit from Mike Kasdan there, who's going to give us some continuity next week with some more depth on the regulatory developments that we alluded to. So please, everyone, come to day 2 for regulatory finance and investing in blockchain landscape, September 13th. This one's going to be at 11:30 and not at 11 Eastern time, also on the 361 Zoom channel. The agenda is going to be a bit more regulatory news and developments, use cases, but also fund structuring, liquidity, and investment methods without getting too specific into the strategies. So please register on the 361 Firm website if you haven't already. Thanks for coming. See you soon.
Thank you.
Thank you.